Thank you for being here today, Jorge.
Pleasure to join you again here, Jasper.
So, could you introduce yourself to the viewers, quickly talk about your career?
Sure. I'm Jorge Ganoza, President and CEO of Fortuna Mining Corporation. Fortuna is a company I co-founded with two associates back in 2004. And it's been quite a journey over the years. And here I'm to talk about the company. I'm also a geological engineer.
Could you summarize the third quarter?
You know, we had a very strong quarter, a record quarter in our history in terms of key financial metrics. We had record sales. So we are fully capturing the benefit of higher prices with our production, $275 million in sales. But more importantly, our costs were kept within guidance. And we managed to expand the margins of our business and reported also record net income, attributable net income of $50 million, 16 cents per share. We beat the analyst consensus on earnings per share. The analyst consensus was at around 11 cents per share. We, as I said, came up with 16 cents. So our cash flow from operations came in at a strong 38 cents per share, and beating also analyst consensus at around 32 cents. So all in all, a very strong quarter with expanding margins. We recorded an EBITDA of $131 million, which represents a 48% margin over sales, right? So we're very happy with the results. We're very happy with the work that the organization is displaying to contain costs and fully capture the benefit of rising prices.
So 9 months have passed now of the year. Could you give us an update on how you're tracking to meet guidance, both on the production and cost side?
Yes, on production, we're traveling around the midfield of guidance. In terms of gold equivalent ounces, our guidance is between 450 and 490,000 ounces. So we're probably going to be in the range of 460, 470. We delivered 110,000 gold equivalent ounces in the third quarter, right? 85% of those equivalent ounces is gold sales, and 10% is silver sales. And the balance is the small byproduct lead and zinc that we get from our Peruvian mine, Caylloma. So precious metals account for 95% of the gold equivalency I'm talking about, just for reference for your audience. With respect to cost, we're traveling on the midfield of guidance. Or all-in sustaining cost came in at around $1,050. Our lowest cost mine is our flagship asset, Seguela, in the Ivory Coast, where we're operating at a cash cost per ounce of under $700 per ounce, right? And when we think of all-in sustaining cost, which considers the sustaining capital we invest at our mines, that one is traveling on the upper end of guidance at around $1,600 per ounce. And basically driven by the fact that we have one mine that's traveling a bit higher on cost, driving AISC higher. And also we're advancing investments at our Yaramoko mine in Burkina Faso. We have increased our capital budget by $11 million in 2024 with respect to what we guided at the beginning of the year. And the reasoning for the increase of $11 million in our capital budget at that one mine is driven by the fact that we had success with exploration. And we are advancing development so we can harvest those ounces in 2025, right? So in a way, it's good, a good investment that will provide for a strong 2025 at that one mine. but the money needs to be spent this year. And again, we couldn't capture that in our budgets just because the outcome of exploration success throughout the year is driving the decision to expand it, right? The budget.
So then, Seguela, your flagship mine, could you just give us a general update on Seguela? Not so much this quarter, perhaps, but mostly next year, which have already, and the coming years, which you gave some insights to in your MD&A.
Yes, Seguela has been traveling well in its first full year of operations, meeting and exceeding our expectations on ounce produced, cost, and capital. For 2025, following what we've been sharing with the market, which is the fact that we've been expanding the mine. We have been expanding the mine, the processing facility beyond our expectations, really. So remember, the processing plant and facilities were originally designed with a nameplate capacity of 154 dry metric tons per hour, which is about 1.25 million tons of treatment capacity per annum. Today, we've been able to expand that by 35, almost 40%, without any significant investment. And we have achieved that throughout the year. And the team at site has done an excellent job with the optimization of the asset and the facilities. So, that's a very good outcome for 2024, but it also triggers capital requirements into 2025. For example, a very simple one to grasp, Jasper is, or tailings facility is filling at a 35-40% higher rate than originally estimated, so we need to expand it, right? So we're allocating capital for that expansion. We're consuming the ore bodies at a 35-40% higher rate, so we need to do surface access, land compensation, build roads to access some of the more distal ore bodies to the plant in 2025 as well. So all of that work is going to lead to about $10 million higher capex we estimate in 2025 with respect to this year. And that is not considering probably a larger amount of drilling we'll have to carry in 2025 compared to this year as well. So we're looking forward to, with all of these investments and the higher throughput we're achieving, unlock the asset potential. And as we mentioned in our news release, what we believe we're unlocking is the opportunity to produce anywhere between 140,000 to 200,000 ounces of gold annually at this one mine, right?
So with a 25 million higher dollar capex, probably for next year, and more drilling, how do you think that will impact all the all-in sustaining cost? And they already have now some sort of ballpark estimate.
Definitely it's gonna drive AISC higher, right? Today, Seguela is a low-cost mine, and the low cost is a relative term in this industry, right? Because what are we measuring cost against? And what I use, Jasper, is the World Gold Council as a guideline. And the World Gold Council tell us that today, all-in sustaining cost, the average all-in sustaining cost for the global gold mining industry is traveling at around $1,500 per ounce, right? And that figure is updated quarterly, but that's roughly where we sit today. And Seguela is producing gold in 2024 at an all-in sustaining cost in the range of $1,100, no, for the year. And in 2025, we should expect higher AISC, but still, I would believe our expectation is that it will land in a place that's still competitive against the average cost of production for mines around the world.
Sunbird, do you think you will develop it next year or will you just prepare for development?
A lot of preparation will take place in 2025. The anchor deposits for production in 2025 will remain the same three ore bodies we're mining this year: Antena, Ancien, and Kula. And 2025 is a year where we're preparing Sunbird and Badior, a new deposit. So, all of those preparations will be taking place in 2025.
Great. And so, how's the trade-off studies going for underground mining at Sunbird?
Advancing well. A lot of our exploration drilling in the second half of the year has focused on expanding and infilling this area, which we call Sunbird Deep, which is the basis for the case for underground mining. No, we need to develop an anchor zone. I believe we have multiple opportunities for underground mining across the property, as most of the 6 deposits that we currently have under reserves have mineralization remaining open at the bottom of the pits. But our vision here is that we need an anchor deposit, for underground mining, and from there we can operate smaller satellites, right? And we believe we have that anchor deposit at Sunbird, where we have over probably 200,000 ounces of gold, which is higher grade than what we're currently mining from the pits, supporting the case for underground mining, and then bringing opportunities from the other satellite underground operations. No, I'm looking forward here, thinking the mix of underground operations that we will have.
Will you release results, or do you think just that you will put out a press release once you have made an investment decision? Or
I believe for Sunbird, the timing will coincide for when we publish our annual resource reserve inventory, which is around the end of February.
So then, if we talk about Kingfisher, you will put out the maiden resource in Q1 next year. Do you have any idea of when you could bring it into the mine plan?
Our expectation is that we can provide to the market results on Kingfisher before the end of the year. And more than Kingfisher, it will be an update on Seguela resources. Seguela at the end of the year is our largest recipient of drilling and exploration funding in our portfolio. And our plan is to provide the market with an update on that work before the end of the year. And that, of course, a big part of that is Kingfisher.
Do you think, the 2 kilometers of strike length, how do you think you will mine it? By just having one guy in pits, or having a smaller pit and then doing gradual pushbacks, or several pits, or?
Let's go step by step, because first we're building the resource. We have identified mineralization throughout a 2-kilometer strike length. That does not necessarily mean that we'll have a 2-kilometer pit, by no means. But we're still exploring, we're still drilling, understanding it. This is going to be our first resource at Kingfisher. We're very excited about it, but I think we still have some way to go to really unlock the full potential of the discovery, right? So we're drilling continuously. We expanded our drilling budget this year just to focus on Kingfisher and Sunbird Deep. Those were the 2 focuses of our expanded budget. But we have identified mineralization over 2 kilometers, as I said, and we're drill testing the full length, and we're looking anxiously to that first resource, which will help guide our exploration work moving forward, as we try to define a more measured indicated resource. Probably at this first pass, we're coming from the discovery phase. So we've been testing the boundaries of mineralization and whatnot. So the expectation is that we can have a largely an inferred resource and a better understanding, so we can continue target our work, right? It's a bit early to talk about a pit.
So, thank you for being here today, Paul.
Absolute pleasure, Jesper.
Paul, could you introduce yourself to the viewers?
Certainly. Paul Weedon, I'm Senior Vice President of Exploration for Fortuna Mining.
Great. What have you done prior to joining Fortuna? When did you join Fortuna?
I joined Fortuna in October 2018. Originally, it was through the Roxgold side of the business that was acquired 3 years ago by Fortuna. So, yeah, I've been with them for 6 years now.
Kingfisher is shaping up to become Seguela's largest deposit. So you released, I think it was like 58 holes totaling 7,000 meters in Q3. Could you summarize what you learned and what you know so far of Kingfisher?
Yeah, look, Kingfisher's turning out very well for us. It's got a really solid footprint. It's nearly 2 kilometres in strike length, of which probably 1.4, 1.5 kilometres of that 2 kilometre zone is the main part of mineralisation. Essentially it's the next corridor over to the east. It's the same corridor that hosts Boulder and Agouti to the north, and they're both about 1.5 and 3 kilometres further north. And we're about 5 kilometres approximately to the plant. We're sitting on the contact between a couple of different units there. What we are seeing is the mineralisation is consistent with the structural model that we've developed for the wider Seguela area, in that we're seeing these northeast orientated kinks in the main structural corridors, main shear zones, are more prospective for us, and Kingfisher absolutely aligns with that. We've got a fairly shallow plunge to the south, still wide open to the south, and it's still wide open at depth as well. We've got 2 drill rigs still drilling on there. We'll keep drilling right through to Christmas time, and then take a short break for Christmas, and then back into it early January. I think the other part of this story, though, is that not only was it a blind discovery, but also it highlights the potential further south. We've done no geochemistry further south on the same corridor. It's a very high target environment for us, and the guys will be looking to get into there in a few weeks from now when the rains have just stopped there. The grasses are very high. We just need them to die off a bit so we've got better access. So, it opens up the rest of that corridor further south.
What's the current? So you say 2 kilometers. Have you defined at strike on strike?
Yeah.
Of which 1.3, 1.4 kilometers for the main mineralization. Does it start right from surface?
Yeah. So basically, it's covered by between 1 and 2 meters of colluvium that's come down the flank of the hill. So the way we found it was that we did some regional geochemistry, and there was a single point anomaly at the northern end of the deposit, which was weakly anomalous. It was the sort of thing which often you'd overlook or you'd rate as quite low level priority, but we followed it up anyway. And as soon as we opened it up, we realised there's this 1 to 2 meters of cover. So we drilled through that, and next thing you know, we're getting consistent 15 to 25 meter intervals of 1.5 to 3.5 gram mineralisation. So what it highlights is that, and we know we've got a lot of this sort of cover in quite a number of areas across Seguela. And what complicates things is that when we do our regional auger sampling programs, we do know we have issues at times when we hit the weathered horizon has these large, almost cobble-shaped boulders in them, and the auger rigs don't like that, so we don't get full penetration. And this is one of those areas. So we recognise that's a limitation, so we have to be very careful about when we drill those that we don't overlook new areas. So it just continues to highlight that Seguela's got a lot to give for us.
What's the average thickness of the mineralization?
Yeah, so it varies a little bit along strike, but generally we're seeing fairly consistent mineralisation between 10 and 25 metres true width throughout the main part of the strike. Now, there's several vein sets in them. There's 2 or 3 different vein sets. They're all running parallel to each other. Sometimes they merge together, sometimes they split apart, so it's a little bit difficult to say which one's 20. There's not one that's 25 metres, but together the ore zone is around about 25 metres. But they're very close together. And that's consistent with what we've seen across the rest of Seguela as well. If you look at Sunbird, it's a similar story, and Tanner's a similar story. So it's a remarkably consistent series of ore bodies there.
3 vein sets, and each vein, what's sort of the average thickness of that? And I assume it's quartz veins.
Yeah, the quartz veins. I mean, these are big shear-hosted systems, so the quartz veins zip through the shear zone host itself. Look, aggregate, these things are 10 to 25 metres. individual veins themselves, 3 to 5 meters probably, but there's not just one vein. You get a swarm of them running through there.
Yeah.
So it's just a big zone of mineralization. But yeah, it's very distinctive. You see it, you know you're in it, you know it's going to be mineralized. You can see the pyrite. We get a lot of visible gold, so which is always a good sign.
Average depth and average grade. Do you have any ballpark estimates so far?
Well, it's still wide open. The deepest drilling we've drilled is around about 240 meters vertical, approximately, and that was a very good hole. It came back with strong mineralization. We haven't drilled any deeper than that. We've been focusing on methodically infill drilling the upper 150 meters, 200 meters, so that we can get it into the mine plan sometime next year. So we're trying really hard to advance this through to inferred resource and then through to indicated resource in the next 6 months or so. So we've been really focused on that. As we roll through that part of the program, we'll then look to step down deeper and continue to follow this thing down to depth.
You will release a resource in Q1 next year, but do you think that the deposit will more or less be fully defined, or do you think that you will still have, besides at depth, or do you still think that you will have a long strike, perhaps?
I think at the moment we've seen what we currently understand as Kingfisher. I think we've seen the natural edge of the shear envelope as we come out of the northeast orientation. So it's a north-south structure. We get these north-northeast kinks, northeast kinks. Then when they flatten back out to north-south, the mineralization tends to tighten up again. But we do know off the regional geophysics that there are many other kinks in this same structure further south. So I'd be very surprised if we don't find more along strike to the south. But that might be 500 meters, it might be 2 kilometers. I don't know yet.
Geologically speaking, what similarities and differences do Kingfisher have with the other deposits at Seguela, other than being larger?
Yeah, I mean, I think the only thing that we can see at the moment is that the plunge orientation is slightly flatter than what we see at Sunbird, at Ancien, Agouti and Boulder, is a little flatter. That's probably the only difference at the moment. We are seeing, one other thing, we are seeing a greater association with some felsic intrusives. They seem to be intimately associated with the mineralization itself. And I suspect they're acting as a rheology contrast. They're a little bit more brittle. They're tending to fail a bit more inside the shear zone. But that's probably the only two notable variances that I would say. Yet we've seen again and again at Seguela is that the mineralizing styles are very, very consistent across all of the different lithology types.
So you are conducting drilling at Sunbird to determine if it would be amenable to underground extraction. How deep have you traced mineralization so far?
The deepest vertical is close to 650 meters now. If you take the deposits, the plunge orientation of the deposit, we've got mineralization over an 800 meter down plunge zone now. So vertically 650. On the angle, following from the edge of the designed pit, probably 800 meters beyond the pit. So it's a fairly sizable piece of mineralization now.
What's the average through thickness of the veins, especially underground?
From an underground mining point of view, we're looking at probably 3 to 15 meters for the majority of it. It'll sit within the range. And it's similar to Kingfisher in that we've got 3 dominant vein sets, which anastomose, they come together and pull apart again. But yeah, we think we've got 3 predominant vein sets within that, probably a 25 to 35 meter wide mineralized corridor shear zone. And yeah, the veins are within that host. But yeah, we do get good continuity from section to section.
And what average grade are you seeing underground?
We haven't run the final numbers. We're still doing the models now. But yeah, if you just have a very quick look at the raw data, you're looking at the sort of 5 to 7 gram range for underground.
Well, that should certainly be possible. It will be economical, especially in West Africa, or in Cote d'Ivoire. So
absolutely.
So
we see a strong future of underground there. And the other thing to think about in the underground context at Seguela is once you get the first one, let's say at Sunbird, then the extensions underneath Ancien, Cooler, possibly even Sunbird, Kingfisher, you could easily envisage several other undergrounds developing off the bottom of those open cuts at some point in the future. It's, in every one of our deposits, it's only open cut economics that stop the pits. It's not a lack of mineralization.
So what other deposits at Seguela do you think could be amenable to underground mining?
Well, I think right now Sunbird is clearly the leader of that particular pack. I think Cooler has some reasonable potential. I mean, the structures are strong there as well, and we've got some very high grades. NCN is potentially another one. I'd like to go back and have another look at Antana. I think there is potentially some possibility there. We touched on Kingfisher. That's still wide open. We haven't really thought much about that one yet. And then you got the small deposits, the agoutis and the badios of the world. They're relatively small, but they're quite high grade for what they are. They're very distinctive. They're much more of a coherent single vein in those ones. And they could well be. They're quite small at the moment, but you never know. These things could pop open to something, especially if they're really looking at incremental ounces to the overall mine plan.
I mean, are there any other deposits or prospects at Seguela that you would like to mention or give some recognition to?
There's none specifically. I mean, we've got a fairly healthy program of exploration, bringing new targets through. We run a series of. We give everything an alphanumeric code. P21, P23, it just means the target number 23, target number 21. So we just keep running through that list all of the time. And we've probably, we've got at least 30 on that list at the moment. It's not until we actually do some follow-up scout drilling, reconnaissance RC drilling, that we then assign a name to it. Once we assign it a name, it automatically moves up the level, as did Kingfisher, and as did Sunbird in the last 2 years. So it's that point that we find something that's got economic grades in it, we give it a name. So yeah, at the moment, there's probably more than 30 targets, and that's how we keep it.
Let's move on to Yaramoko. It's performing steadily. I mean, 28,000 ounces produced last quarter at an AISC slightly less than $1,400 an ounce. But so the previous guidance has been that you'll harvest it for next year as well, and then sometime in 2026 you will close it down. What probability do you see that you can push it to 2027?
I make reference to 2021 to answer that question. Why? Because when we acquired Roxgold in 2021, Yaramoko was set for closure in 2023. It was set to exhaust reserves sometime in 2023. And to the contrary, through exploration success, is that we had a very strong 2023. We're enjoying a very strong 2024. We're looking forward now to a very strong 2025 as well. And as we sit today, the mine exhausts reserves in 2026. I can advance to you that we continue finding through extension, through the deep extensions of mineralization, of our drifts, on the boundaries of mineralization, we continue encountering mineralization. So these are not, these are, I would call them marginal gains, but once you make marginal gains every quarter, then all of a sudden at the end of the year, you dealt with depletion and have one more year. Is that going to be the case in 2026? I couldn't tell you right now. But I can say that we continue through our underground development, finding more mineralization in the immediate vicinity of our deep mine infrastructure, and we continue expanding there, right? So we're making these small incremental gains every couple of months, every quarter, and that's where we've been very successful so far.
Production for next year should still be around 100,000 ounces per year.
Over 100,000 ounces, yes. Over 100,000 ounces.
So, Yaramoko, could you summarize the work that you have done at Yaramoko this year? And also summarize the work for an exploration plan for next year?
Yeah, look, Yaramoko is a tricky one for us. The guys have been very successful in finding strike extensions to the Zone 55 from underground. We've also been successful at Bagsy South with some additional drilling there recently that's just showing that mineralization does carry on. You also have to recognize that Yaramoko is coming towards the end of its reserve life as we currently have it. So the team on site's looking at the data they have now, the more recent drill results, and seeing sort of how does that fit into the bigger scenario. And then on the surface, Razak and his team have been looking at several anomalies, doing some reconnaissance work on those. And we're always hopeful that we'll find more. It's hard to imagine that there won't be more there. There's a lot of smoke. There's a lot of anomalism. And the guys are doing a good job there trying to just methodically track down those anomalies. So, yeah, we've been busy. We've had a rainy season that's run a bit longer than it normally does this year. So the guys haven't quite got back out to the field just yet. So we'll just have to wait and see. The plans for next year, we're still developing those. It'll depend a lot on what the results are from this year's programs. So just watch this space, basically.
So would you say that are you winding down exploration spending at Yaramoko next year, or I mean, you spent $6 million US this year, or
Yeah, we probably won't spend quite that amount next year. We're just going through the budgets at the moment. We've got meetings in the next couple of weeks on those. Fair to say it's probably not going to be as aggressive next year, given the relatively short mine life. But yeah, we'll just have to wait and see on that one.
So Diamba Sud, you released drill results from Diamba Sud. Could you summarize the results from the 4 prospects that you released results on? So Western Splay, Karakara, which is one of the 4 pits, and Kazuko and Bogura.
So essentially, these are the results from the most recent campaigns. Similar to Yaramoko, we've had a very long rainy season. It probably went a month longer than it normally does, and we're due to get the rigs out there sometime next week to start drilling again. The big one for us is probably Western Splay. That's not in resource at this stage, and we've been looking hard at seeing if we can do work to bring that one through. So that's has been a high priority for us. Karakara was also one which, from the Chesa acquisition, we'd flagged as needing a lot more work on just to better understand it. The whole Diamba Sud complex is a very complicated geological story, and we've spent a lot of time in the last 3 months or so doing some pretty detailed structural studies, understanding the lithologies better, and we've got I think a much greater understanding of the controls on mineralization, which is feeding into where are we going to go to in this forthcoming field season. So those results that we've released all fit back into this and support the structural model that we've got. Bogura is further south of the main parts of the mineralization, and it's one which we will continue to do some work on, but it's not the highest priority we've got. We'd rather build out the Western Splays as well as the several other anomalies that we have and prospects that we have. Like Southern Arc is another one, for example. And so we'll work on that this coming season, and they will all feed into the overall PEA that's coming out next year.
Is there any deposits that looks to be larger, significantly larger than the other ones, or prospect or other?
No, not especially. I mean, it's Diamba Sud is, at the moment anyway, is a series of deposits. So Area A, Area D, Karakara, they're all around about, well, Area A and Area D collectively are around about 250, 300,000 ounces. You know, that's what they are. The others all make up the balance of the total historical resource that's there. And what we've seen in the drilling that we did last season is that we are seeing areas of mineralization extending beyond the historic pit shells that were designed. And we've seen a lot more, like the background to doing the structural model work was to try to better understand the relationship between these different deposits. And we think we've got a good handle on that now. We think there are things there that were subtle and were starting to be recognized a year ago. We've got a much stronger understanding of those controls now. So, yeah, but coming back to your point, is there a bigger deposit? No, they're all much as you see today. I think you'll see, similar to Seguela in a lot of ways, we'll just continue to add more prospects to them. But the other benefit of the revised structural model is that it's highlighted areas which I think previously had been discounted from their prospectivity. And we think that it's worth going back and having another look at those areas now with a slightly different understanding of what's going on there.
So next steps for next year, if you just summarize it.
For Diamba Sud, next steps. It's really now the focus is on finding and bringing through the new prospects. Western Splay is probably the first of those ones. There are several more that we will be working on. And so between now and when the rains start next year, end of June, beginning of July, there'll be a big push on regional exploration within the property package itself. Bringing some of these anomalies that we've identified, testing them, and hopefully bringing them through ultimately into a mine plan at some point. So it's really this is the first time we'll be doing proper exploration, whereas the last season was really about advancing and updating the resources that we had there that we'd acquired from Chesa. This season is going to be extending that out now and bringing in new prospects and converting those.
And the Diamba, you're, from speaking with Paul Weedon, delivering on the exploration front, and you should probably have reached, or at least have 1.5 million ounces in line of sight by now, although not defined as resources, but at least line of sight. Could you walk us through the current development timeline for the Diamba?
Yes. At Diamba, let me remind you, and following on what Paul has said, our view is that the deposit, the property, holds the potential for that million and a half ounces, right? And probably more, no? But as a minimum, we see that potential. Now, we need to capture that potential, and that's a process. So, a lot of our work in 2024 has been aimed at enhancing our geologic understanding. The previous owner and operator of the property, Chesa Resources, did an excellent job advancing the Diamba Sud from a concept through to a gold in soil anomaly and through to a resource, basically on two deposits, Area A and Area D. The deposit stands at around 800,000 ounces. But you know what? With the limitations of a small underfunded junior, because that was what Chesa was, they could not put all the time and effort in really understanding the controls of mineralization and other opportunities within the bigger property package. So our first aim in the drill program has been enhancing our knowledge of the ore body. And so concurrent with that, we've been testing some other soil anomalies, other areas where we see artisanal diggings, and with a lot of success. As an outcome of that, we have new deposits like Western Splay, Kososoko. So, but we have these two programs concurrent, and Fortuna has not produced yet a Diamba Sud resource. We continue to have the historic resource by the previous owners. So before the end of the year, our aim is to provide or produce the first Fortuna resource for Diamba Sud, and one where we can all bank that we have proper geologic understanding of mineralization controls. We have a robust geologic model in support of the resource estimate, right? So that will also serve as a basis for a lot of the engineering work we're doing, and also for continued exploration as we search for that, million and a half ounces. Are we gonna get to that million and a half in this pass? I still need to see that. No, I haven't seen the numbers. It is an expectation, but our view on the deposit has not changed. No, and
when you say this pass, what do you mean drilling that you do now post wet season, or
this pass is the information that we've been able to capture in the resource estimation work we're doing. The wet season has come to an end, so we are, if I'm not mistaken, drills arriving this week or past week. We have our first rigs back in the property. That information is not going to make it to a resource estimate, the one we aim to publish before end of the year, right? So the first pass drilling is the one we carried from November 23 to about May, June of this year.
But as soon as you see that you could do a resource estimate containing 1.5 million ounces, which would mean that you could have a production rate of in excess of 100,000 ounces per year, will you start the development and doing a PEA or what's
We're running parallel tracks here, Jasper. No, our view hasn't changed on the deposit, so we plan to continue drilling. In fact, as I say, the drill rigs are back in the property. We are going to produce our first Fortuna resource estimate, no, and continue building on that. Parallel to that, we're doing two other things. One is advancing with a PEA study. That PEA engineering level work should be completed by first quarter of next year. And also parallel to that, we're carrying environmental studies, biodiversity studies in support of a permitting process. So we're running the three parallel tracks: exploration, engineering, permitting. And why? Because if we decide to make a construction decision, we don't run into limitations on, okay, let's start biodiversity studies. That will take 2 years, right? Environmental studies, when you need to go through different rainy seasons and whatnot. So we're doing all of that good work in parallel. And also the engineering work. So, for example, for next year, for 2025, in our budget, we have condemnation drilling and initiatives like that. We're taking a bit of a risk because we haven't seen the resource. But again, our view that the deposit has the potential to hold at the very least 1 million to 1.5 million ounces hasn't changed. Now, the question is how we get there. Right.
And Lindero, could you give us an update on the heap leach pad expansion at Lindero and how you're tracking it?
That has been our largest capital project in the portfolio this year, or as a reference, across our mines, our sustaining capital budget for the corporation in 2024 has been $130 million, of which 42 million are this one leach pad project expansion. The leach pad project is coming to an end. It's around 85-90% complete by now. We started placing ore on the leach pad in the month of October, mid-October. So the leach pad was delivered from projects to operations and is under continued operations right now. So that's a very good outcome. There will continue to be some completion work on some ancillary service facilities for the expanded leach pad and whatnot, with the mobilization of the construction crews planned for January and February, right? So we will still see in the fourth quarter of this year some capital related to the leach pad impacting our AISC, and a minor amount coming into Q1 of next year.
Yeah, as you had said in the past, so the cost should go down to what, $1,500-$1,600 per ounce.
That would be our expectation. Remember, in Argentina, we're also battling with lagging currency depreciation with respect to inflation. That has an impact on our costs, but we would expect the mine to drop its AISC in a considerable manner, right?
Great.
Once the project is complete.
And San Jose, we have chosen to close it in Q1 next year. Could you give us an update on that? And will it be permanent or just care and maintenance?
No. We have made a decision, and we informed the market through the beginning of this year, end of last year, that we will be making a decision with respect to the future of the San Jose mine in the third quarter of 2024, and that's what I did. So we have provided guidance with respect to the future of San Jose. San Jose will go into a progressive mine closure starting in the first quarter of next year. What does a progressive mine closure mean? It means that we'll have concurrent closure activities along with some residual mining, we'd call it. San Jose has exhausted the reserves we estimated at the beginning of the year, but still has resources and some smaller, higher grade portions in the resources, like, for example, the discovery we made earlier in the year, the Yes event. So we plan to carry some residual mining of those higher grade resources, concurrent with some closure activities. Mining will take place at a smaller rate. This mine has been processing ore at a rate of 3,000 tons per day, almost 28 to 3,200 tons per day over the last years. And this residual mining will be conducted at a rate of under 1,000 tons per day. It will be on selected areas of the underground mine. And our expectation is that we can fund a significant portion of the closure activities in years 1 and 2 with the cash flows from this residual mining, right? And the residual mining does not really interfere with a lot of these closure activities. So, that's how we plan to manage it. And the closure plan, by the way, is a multi-year closure plan, no? Where the bulk of closure activities take place in the initial 3 years, and then we go into a monitoring phase.
So, I mean, let's speak about San Jose. You will start closing down San Jose in Q1 next year.
Correct.
What exploration activities, if any, are you currently conducting and will conduct next year?
At San Jose itself, we won't be conducting any exploration activities there because the mine is moving towards that closure process. However, in the wider Mexican space, we've reinvigorated the exploration project there a year and a half ago. We have got the joint venture with Riverside Resources at Cecilia up in the north of Mexico. And we've got a couple other projects which we're in the final stages of negotiating now. So ideally, we'll be looking to have 5, 6 or 7 sort of projects in Mexico from an exploration point of view that will be advancing throughout the next couple of years. So we like Mexico. We like the geology. We like the potential. Now that the change in president has happened, we're looking forward to seeing how the new presidential structure, how the new bureaucratic structure works out. And, we've got a lot of faith in that moving forward.
So, is there any other project besides San Jose, Cecilia, and Diamba and Seguela and Yaramoko that you would like to mention with regards to exploration efforts?
Yeah, look, moving down to Peru at Caylloma, Cayllama's always been a bit of a sleep, a bit of a quiet project for us, exploration-wise. The guys the last 2 years have been pushing hard on trying to get money and do the work on several large color anomalies, alteration anomalies that we've got on the property. Antocoyo has been mentioned in the past. We believe that's a large high sulfidation system. And then further north, we've got Santa Rosa, which consists of several large color anomalies, of which the guys in the field have been out doing some reconnaissance work on, some trenching. And we're getting some, certainly encouraging results to understand these things. And, the hope there is that we've got some preserved systems. We're certainly seeing evidence of that. So over the next season, we'll be looking to see how do we advance these through the process. The guys are keen to put money in the budget for next year to do some further follow-up work and possibly even some drilling on those projects. As they come out, they do look like intact high sulfidation systems, and who knows where they lead to. We've recently done some work with a specialist consultant, and he's highlighted that we have a lot of similarities to the Maricunga style porphyries from northern Chile, not that far from northern Chile. So, that's an intriguing prospect for us to follow up with as well. So, they're very much in the generative space, but it's interesting to see that we have more than one style of mineralization present at Caylloma.
Do you have anything you would like to mention with regards to Caylloma?
The Caylloma mine, as always, is delivering quietly. It's our smaller mine in the portfolio. It's not a large free cash flow contributor, but every year it gives us, 10 to 15 to $20 million in free cash flow. So there are no headache-free mines, but if there's something that gets close to that, is this one mine. The team does an excellent job there, and we currently have a healthy reserve and resource life. We're excited about some exploration ideas that the team has outlined and have emerged, and we want to pursue them in 2025. These are this is a departure from the traditional veins that the district is known for. These are more higher level epithermal disseminated type gold deposits that we will be pursuing. No, in the top of porphyry systems, these high Andean buried porphyry systems. So we believe we have some telescope called gold systems um, on in our property. We have a large property package here. So those are two. We have two of these. One is Santa Rosa, the other one is Santa Coyo, and we're excited about pursuing those opportunities in 2025. Again, these are, let's say, high geologic risk but low financial commitment to the company, right? So we're going to pursue high risk, high reward.
Yeah, let's talk a little bit about, you have a large cash position of 180 million US and it keeps growing. What are your thoughts on how are you going to deploy that to create shareholder value?
The first thing is coming out of a capital intensive number of years in the company with the construction of with the construction of the Lindero mine in Argentina, the acquisition of Roxgold, the construction of the Seguela mine. Our set priority for capital allocation was strengthening the balance sheet. Over the last year and a half, that has been our primary focus. No, I believe that mining companies, as we have no pricing power, evidently, need to be run with a fortress balance sheet, right? That allows us to capture opportunities as emerge, but more importantly, manage the risks of a naturally risky business, right? So today we have liquidity available to the company of around $400 million. We have $180 million in cash. We have a debt to EBITDA ratio or gearing, no, or debt gearing is a low 0.2. And this third quarter, we pivoted into a positive net cash position. That means we can service all of our debts and still be net cash positive, right? So we are in a very strong position that we look to strengthen even further. So concurrent with that, we're assessing other possibilities. For example, in a market that's so disconnected from the price or the valuation of mining equities, in this case Fortuna, to the gold price and silver price. We are active again with our share buyback program. No, we have a share buyback program in place, and that's a way to return to our shareholders. And we see a big value proposition there in buying back our shares, so we're active with that. And yeah, and also being reinvesting in the business. In 2024, we had our highest exploration budget on record as well, close to $45 million at the end of the day. That's about 5% of sales. We're tracking to generate revenue this year of over $1 billion. And we're investing about 5% of that back into the business in exploration. We plan to continue investing aggressively in harvesting the organic growth opportunities that we have in our properties, and then also remaining opportunistic on new value propositions as they emerge in West Africa or Latam, right?
Where do you vision Fortuna Mining in 2 years from now?
We continue to message that for us is the midterm is about consolidating the 500,000 ounce production range with competitive cost, which means we should be producing at or below the global average for the mining industry, which today, a picture of the moment, is around $1,500 per ounce. And with assets where we can show a decade plus in reserves. No, so we are not there yet. There's still work in the portfolio that needs to take place to achieve that, right? And that is what we're focused on.